Do you want to learn how to use the MACD indicator to avoid market crashes, know exactly when to buy, when to sell, and avoid common pitfalls that most people do when they use the MACD indicator? I'm sharing all that in this video, and if you stay until the end, I'm giving you step-by-step trades that you can take based on the indicator. So not only will you learn how it works and the pitfalls to avoid, but you'll also learn how to make money and be able to read it correctly, even if you're an absolute beginner. So let's dive into the video right now. So first things first, we need to put the MACD indicator on our chart. We simply go to indicators no matter what charting platform you're using, whether that's the free TradingView account like I'm using here, or you're using your broker or something else. Type in moving average, convergence, divergence. That's the actual name of it right here, MACD for short. So you're going to add this to your chart, and we're not going to mess with any of the settings. We're just going to use the default settings. This is what the MACD is. It shows a lot of things. It basically shows us a combination of moving averages. Where is the market going? Where is it likely to reverse? And what the current momentum is. And so we can see the strength and all that moving right here. But I don't want to get into these specifics. I want to show you how you can read it to make money. So how do most people use it? They use it where they look for the cross to know when they should buy and when they should sell. If the blue line crosses above this red line, then it's a buy signal. If the blue crosses below the red, it's now a sell signal. So you can see here, this would have given you a great buy signal here, but right here, it would have given you a bad buy signal. So you would have made, you would have lost money here, you would have made some back here, but still it's not 100% accurate. And although nothing is in the market, this is not the best way to use the MACD indicator, because you can also see here it triggered a sell signal and then the market exploded and we would have missed out on that trade. So again, using just this as the simple buy and sell signals of the cross like most people do is not actually going to lead to a consistent profitable return. Instead, what you want to do is what happened in March 2020. So here, I'm going to showcase what happened in March 2020 with the huge COVID crash, which is this. You can see here that the market was doing well, a very strong market, then it absolutely crashed and went down because of COVID news and everything picking up. And so how could we have taken advantage of this or known about it beforehand? Well, when I teach you how to use the MACD to decipher this, you can use it in every type of market. So let's zoom in and look at what happens. So you can see here, the market is trending up and doing really well. And what do we know from the MACD indicator? This is what I want to show you. It's called MACD divergence. We're not looking at the lines to see crosses to understand buy and sell signals, but we're looking at what is the stock doing and what are the MACD lines doing. And when we look at that, we look for a divergence. So you can see here, the stock highs are getting higher. So you can see here, the highs are getting higher. That's just a natural progression of an uptrend. But at the same time, what are the MACD lines doing? The MACD lines are getting lower. This is called MACD divergence. When they diverge at a key level, that is when reversals happen. So we can see here that we're trending up. We're at an all-time high. That is a key level. All-time highs are always key levels. Resistances are key levels. Supports are key levels. So if we're coming up to a resistance or down to a support and we see this divergence where the stock and the moving average or the MACD lines are doing something different, that is called divergence, and that is your opportunity to get out of your winning positions, to take profits, and to make money to the downside. Again, the same thing happens to the bottom, right? If we were just looking at the crosses to know when to buy, for instance, when these lines cross, like most people do, we would have tried to get in here, then the market would have crashed again. So again, we're not looking at these lines, we're looking at what the stock is doing and what these lines are doing. So if we look here, we can see how the stock is continuously making lower lows, the lows continuously getting lower. What is also happening on the MACD lines? Well, we look at the MACD lines during the same period, it's coming up. So we have this divergence again, where the stock is headed lower on the lows, but the lows on the MACD line are actually getting higher. And so when this happens, this shows us, hey, high likelihood chance of us reversing here. And so this is how we predict either crashes or bounces or other things like that. When we have a stock doing something diverging from the MACD lines, that's how we know when to profit. I do have to put a key caveat on this, which is also something most people do not teach. MACD divergence was created for ETFs. So if you want to do this well, if you want to do this successfully and profitably, do it on ETFs like SPY, QQQ, DIA, anything like that. ETFs and baskets of stocks is what this works on well. If you try to do it on individual stocks, it will not end up working as well. And so now you know how this works. We're looking for divergence. If a divergence happens at a high, we're looking to reverse to the downside. If a divergence happens at the low, we're looking for a bounce. So again, we can combine this with our knowledge of these lines crossing, how most people do it, and we can find our key entry points when to enter into these trades. So now let's look into the current market. How are we doing? How can we decipher this? Well, it's exactly why I wanted to make this video, because we're seeing this right now. What is the stock doing and what is the MACD line doing? Those are the only two questions you need to ask yourself. Well, if we look at the stock is moving higher. That means the highs are getting higher. So the highs are getting higher. Now we ask ourselves, what is the MACD lines doing? Well, if we look at what the MACD lines are doing, the MACD lines are going down. And so if we see this is a divergence, especially since we're near this critical resistance level. When we see a divergence near a critical level, that is a sign of a reversal. So now that we're hitting at this level, we're going to start to slowly turn over, which we're now doing. Now we're starting to break these lows. So if this low breaks, that is our sign to get short. We can do that by entering in an inverse ETF, which makes money as the market goes up. We can do that by buying a put, which makes money as the stock goes down. We can also do that by entering a call credit spread, which makes money as the market drops. And there's so many ways we can do this to take advantage of the market. But I wanted to make it clear what's happening here. This doesn't mean the market's going to crash, but it's a good sign that the market's going to pull back. And so again, if we can combine that with the lines here, we can see that we are starting to slowly turn over and roll down lower. And so again, where else have we seen this? Just so I can kind of give you some examples. Well, again, we've seen it all throughout here. Here's a great example right here where we came to some new lows. The stock had lows going lower. What did the MACD lines do? They went up. That's a divergence. We can see here divergence here as well. The stock was pushing to new all-time highs. The MACD line at the same time was coming down lows. So what do we look for? Well, we have a MACD line on the chart, number one. Number two, is the market at an either high or a low? Is it at support or is it at resistance? If it's at one of those levels, this is likely to happen. If we're trading in a range, it's going to happen near the upper or lower levels. It's not going to happen in the middle of that range. So look for the outer extremes. Look for what the stock is doing differently from the MACD line. If you see a divergence, that's a great chance to slowly start to build up a position for that reversal, whether you're going short or long. Anyways, guys, I hope this helped you out. Again, if you want more trading tips, you can click down below and join my completely free options course. Just put in your name and email and you'll get access to learn how options work, how I trade them, and the different strategies like this that I use to take advantage of the market. So that's completely free for you. Click the first link down below. Anyways, guys, see you in the next video, and I hope you enjoyed it.